In light of recent events, is Pepper Home Loans satisfied with their current market position?
Yeah, we were very delighted with the PRS7 transaction, which closed about 2 weeks ago now. It was important for us to re-establish the market in non-conforming RMBS, which we have done. So for us, it was also a case of, I guess, opening up that market certainly before Christmas, before we go into the new year.
Pepper Home Loans was the first non-conforming provider to return to the markets post-fallout of the subprime. Take me through the process of how you weighed up the various funding options.
Yeah, sure. Look, before we priced the PRS7 deal, we spent about 2 months travelling around the country, talking to investors that had been loyal to our program in the past, really trying to get an understanding of what they wanted to see in terms of deal structure and what issues they were facing in this current market environment in terms of, tight liquidity. So that was an important process, probably took longer than it would normally take for a transaction, typically, but it was important that we got investors comfortable with what we were trying to do in terms of getting a deal done, but also trying to understand what their specific issues were as to whether they could or couldn't participate at the time. So that was important.
You bought $200 million worth of RMBS through a pool of 10 investors. What made this the most attractive source of funding?
Well, look, as a non-bank lending model, which we are, we obviously don't have a deposit base like a bank, so clearly securitisation is our primary source of funding. We have large warehouse lines with major investment and commercial banks, but typically every 6 to 12 months we look to refinance those through securitisation. So it's an important part of our whole funding platform. So for us it was important we went back to the market and demonstrated that this business model is still a very active one. It was important for our business model, relying on securitisation, to get back out in the market and try and open it up as quickly as possible.
How hesitant were you in buying those funds?
Hesitant in terms, we weren't really hesitant in doing the deal itself. It was, what was uncertain to us is where pricing levels would land in this market, given there's been, I guess, a whole lot of dislocation in the debt markets. We weren't certain where pricing levels would fall. We certainly weren't hesitant in doing the deal. It was more establishing that investors were there at a particular pricing level. We recognised that there would be a premium paid in this market for tight liquidity. And I guess that was part of this process of talking to investors over a period of 2 months, getting some comfort about where those pricing levels would land, but it gave us confidence to do the deal.
Was there any merit in being first to the market?
I think not so much being first, but it was certainly important to us to demonstrate to investors that we had a robust model that would be supported through difficult market conditions. As we've been through a relatively benign credit environment over the last 12 to 24 months. So being first, I think, was important, in terms of vote of confidence in the Pepper business model. The way we underwrite non-conforming loans and the way we service those loan pools was important. And I think it was also an important message to the rest of the market, hopefully to encourage them to come back to the market with deals. And certainly Bluestone's Sapphire program priced last week, so that was an important development. Means that non-conforming market is well and truly open. Pricing's much wider, but it means that we can execute deals.
Has it been harder in recent months to find buyers of mortgage-backed securities?
Certainly from our experience, the domestic investors have been the sort of backbone of this transaction. Typically in the past, for example, our PRS6 deal, which closed in March of this year, 50% of that deal was issued offshore, principally into Asia and Europe. We found during this transaction that those European and Asian buyers are not there right now for various reasons. We think they'll be back, but there's clearly liquidity issues with them putting money into these types of deals right now, so it was very important to find domestic investors to get the transaction done, which we did.
Do you think there needs to be greater transparency for investors buying securitised products in overcoming scepticism?
Yeah, I've heard the transparency argument come up quite a bit. It came up at the securitisation conference in Sydney last week. I think transparency will actually be driven by investors over time. So if you're an issuer in the mortgage-backed market, for example, and you don't provide good level of collateral reporting to investors, you're not providing regular updates on the transaction, I think investors will vote with their feet, and by that I mean they won't participate in the certain issues to start with. Pepper has always had a philosophy towards our investment program of being very transparent, providing very regular updates on collateral performance, arrears and so forth. So nothing's really changed for us, but I accept that the broader market, maybe we need to see more consistency across issuers in terms of level of reporting.
Has the securitisation of funds by non-banks been poorly represented by the media?
I don't think poorly represented is probably fair. I think there has perhaps been a little bit of hype or misunderstanding around, certainly if I take the non-conforming mortgage market, which we're a key player in, there has been a tendency for the media to transpose the US subprime issues directly into our market in terms of credit quality and so forth. And clearly that's not right. The US market was really characterised, and certainly the crash was characterised by a whole raft of issues, principally very aggressive product design, very high loan-to-value ratios in that market, what's called piggyback loans, where there'd be second charge mortgages on top of first and so forth. So a whole layering of different risks which led to the problems in that market, which just don't exist in this market. And what we found on our roadshow was that certainly investors, whilst there was a liquidity premium, we got some comfort in them acknowledging that there weren't the same credit issues that existed in the US market.